Okay, students, today we are going to discuss tax planning. This area is almost a mandatory area and it comes in last 40 marks. Last 40 marks, there is a 10 marks question normally always for planning. Okay, and it's a technical area. Plus, this is very interesting area, not a boring area, very interesting area. You need to use your brain. Okay, right. For this topic, you must have knowledge of almost all tax. Means you have knowledge of individual taxes as well as corporation tax. Plus, you must have some knowledge of NICs, National Insurance Contribution. Okay. Now, running a business as a sole trader. For example, you are a sole trader, individual sole trader, and you are running a business. Then that business income will be treated as a trading income. You are an individual, and you are running a business. So if you are getting that income directly in your accounts, so that means that income will be trading income. And for this trading income, you need to pay three things. As an individual, for trading income, you need to pay three things you have studied. Number one, trading income is treated as a non-saving income. Trading income is treated as a non-saving income. For that non-saving income, you need to pay tax. For that non-saving income, you need to pay tax. For that non-saving income, you need to pay tax. For that non-saving income, you need to pay tax, right? Now, non-income tax on non-saving income. Also, for trading income, as you are the owner of that business, you are a trader, you are a businessman pays two types of NIC for himself. Businessman pays two types of NIC for himself. Number one is class 2 NIC and number two class 4 NIC, right? So if you run your business as a sole trader, then whatever income you are getting from that business is trading income. And for trading income, you need to pay three things. For trading income, three types of taxes. Number one, income is a non-saving income. Trading income is a non-saving income. You need to pay tax on non-saving income. Then class 2 NIC you need to pay, and class 4 NIC. That's it. If you run your business as a sole trader, these will be consequences. These will be consequences, right? Now, number two, setting up a company. Now, second option, you can do this business as a company. No need to do it as a sole trader. Just incorporate a company and run this business in the form of company. Now, setting up a company and run this business with the company name. Now what will be happen? Now with company, corporation tax rate flat is 19%. As Now, if you are running your business as a company, so for company you need to pay corporation tax, and the corporation tax rate, flat rate is 19%. We all know the flat tax rate for corporation is 19%. Flat tax rate for corporation is 19%. Okay, but as compared, now just think, as compared to individual, just compare it with the previous version. If you run this business as a sole trader, then this income is a non-saving income. If you run this business as a sole trader, then this income is a non-saving income. And for the non-saving income, the tax rate is 20, 40, 45. For non-saving income, the tax rate is 20, 40, and 45%, right? Okay. Now, if you run your business as a company, company is not a human being. We all know this. Company is not a natural person. Company is an artificial person. So for company, no need for company. You don't need to pay any class 2 and class 4 NIC. Class 2 and class 4 NIC is only payable when you are an individual owner, when you are an individual, a human. For companies, there is no class 2 and class 4 NIC. Okay. So do compare these two. Wait, check it out. The first option is running a business as a sole trader, then these will be consequences with the red pen. And then the second topic is with the blue pen. Please compare it. Please compare it. Thank you. Now, my dear student, let us say you incorporated a company and now you are running your business as a company. Now you are running as business as a company. Now just think, still you need to extract your money from the company because finally you need money. Finally, individual need money. This all planning was done by the human being. So finally, this guy, the human being, wants the money. So how you can extract money from the company? How you can extract money from the company? Again, you have two options. Again, you have two options. The first option, listen. This is the company. Wait. This is the limited company, and you can be the director of that company. You first of all, you can become the director of that company, and don't forget, director is the employee of the company. Director is the employee of the company. Okay, so you can show yourself as an employee of that company. Now what will be the consequences? Listen, just think. Now whatever company will pay you, now whatever company will pay you will be treated as a salary for company, will be treated as a salary for company. And now listen, don't sleep, this is very technical area. Now as you have become the director, director means employee, director is the employee of company. So company is your employer, company is your employer, director is your employee, director is the employee, so company is the employer. So now whatever salary company will pay you, it's an allowed expense for company. It's an allowed expense for company. It's an allowed expense for company. Whatever salary company will pay you, whatever salary company will pay you, it's an allowed expense for company. Now just think. Now as the company is employer and you are employee. Company is an employer and you are employee. Company is employer and you are employee. We all know this. Employer has to pay. Employer has to pay class 1 employer NIC for all employees. Employer has to pay class 1 employer NIC for all employees. So now company has to pay this NIC. But yes, this NIC is also an allowed expense for company. Yes, this NIC will also be an allowed expense for company. Okay, so I repeat, you have, let us say you have formed a company, now finally you need to extract your money out of that company, you need to take out the funds from the company. So there are different ways. The first way, you become the employee of the company, you can become the director or employee of the company. So when you become the director or employee of the company, okay, then company will become the employer, and whatever company will pay you, it is called salary, it is called salary. So you know that salary is an allowed expense for all businesses. Salary is an allowed expense for company, number one. And now company is your employer, so we all know this, that employer has to pay sorry, employer has to employer has to pay class 1 employer NIC for all employees. So this is the cost, okay. And this class 1 employer NIC is also an allowed expense for company. Now come to your side. Now as the company is the employer and you are the employee, company is the employer and you are the employee. So whatever salary you will receive, you have to pay three things. Whatever salary you are receiving will be treated as an employment income. Whatever salary you as a director receiving from that company will be treated as an employment income. And my dear student, for this employment income you need to pay two things. Number one, non-saving income. Number one, this employment income is treated as a non-saving income and you need to pay income tax. As a director, you need to pay income tax, okay, individual director. Number two, now you have to pay class 1 employee NIC, because now you are employee, so you have to pay class 1 employee NIC, okay. And one extra thing I would like to say, company must pay as you earn to government on your behalf, okay. See, you have to pay income tax plus class 1 employee NIC. So this is the first case, please. If you are the director, read it and think over it. Don't sleep. Read it, please. If you are director of the employee, then company is the employer. whatever company is paying you is salary, is allowed expense for company, plus company will have to bear class 1 employer NIC. This is also this is also a cost. And as an individual, you have to pay income tax on employment income and class 1 employee NIC. Okay, these are the consequences. Are you getting the point? Please write, hit the chat box, please. If you are getting, please hit the chat box, please. Thank you. Okay, thank you. I will give you the slides after the class. Don't worry about it. Okay. Now, the second option is listen. You have formed the company. And now you need to take out funds from the company. You have formed the company and now you need to take out funds. So the second option is you become the shareholder. Of that company. You are already the shareholder. You are the single owner. You are definitely the single owner of that company. So now you can take out dividends, ordinary dividends from that company. You just declare yourself as a shareholder and you take out ordinary dividends from that company. Now listen. Be a shareholder of that company and withdraw dividends. Now these dividends not an allowed expense for company. We all know this. Yes, salary is allowed expense. Dividends are basically profits distribution. To owners. Profits distribution to owner shareholders. So it's not an allowed expense. Don't forget. Okay. But now, as there is no more employer and employee relationship, as there is no more employer employee relationship, so there is no class 1 employer NIC or class 1 no more NICs, we all know this. On dividend income there is no NIC implications. On dividend income there is no more NIC implications, right? Okay, no more NICs implications on dividend income. There are no more NICs implications, right? So now in this case, no NIC, but yes, when you take out dividends from the company, so as an individual, it will be a dividend income for you. It will be treated as a dividend income for you. And on dividend income, the tax rate are this 7.5, 32.5, and 38.1. Remember, 7.5, 32.5, and 38.1, plus you will get the NRB of 2000. For dividend income, we all know there is an NRB of 2000. For dividend income, there is NRB of 2000. Right? Right. Did you get it? Did you get it? Read these red lines. Okay, now we are going to do the first question. Today I'll be teaching you three practical questions, and we'll try to fix this topic. Okay, so be very active. Lot of things inside, but obviously you don't need to sleep. This is the first requirement. Okay, now let's start. If you want to take the pick of this question, you may wait, giving you time. If you want to take the pick of this question, it's on your screen. Take a pick, take a pick. I think this is not in your kit anymore. In your exam kit, this is not. This question was available in last year exam kit. Now it's not no more. So just take a pic of this question so that you have a question on another screen as well on your cell phone, right? Now you should you should assume that today's date is 15th March 2020. 15th March 2020, please. You are trainee chartered accountant dealing with tax affairs of Gamila, who is the managing director of currently 100% shareholder in Alimark Limited. Okay, so she is the 100% shareholder of this company. This is completely 100% owned company, right? Okay, now for the year ended 5th April 2021, Alimark Limited taxable total tax TTP total taxable profits before taking out directors remuneration are forecasted to be 180,000. Okay, this is the profit of companies without deducting any salaries or anything. Okay, this is the TTP of company. This is the TTP. Remember corporation tax. This is the taxable total profits. Now the interesting thing is that they have already solved one part of the question. Listen, they have already solved one part of the question and you need to do the remaining parts. Okay, now read the next. Original basis of profit extraction. Original basis of profit extraction. Listen, Gamila originally intended to withdraw 125,000 of these profits as a director's remuneration. Remuneration means salary. Okay, so she wanted to declare herself as a director. She wanted to declare herself as a director, right? Okay, and you have calculated that this approach would result in the following tax liabilities and national insurance contribution. Now wait. Go slow, slow. This is the limited company and Gamila is the employee or director. Okay, so now I have just told you the case. If she's taking out some salaries, then the company is the employer. So for company will be paying class 1 employer NIC. Company will be paying class 1 employer NIC for employee. This is one cost you are going to pay to government. Okay, and second thing, obviously company will have to pay corporation tax. See, they have given you ready-made corporation tax. For this case. They have given you class 1 employer NIC for this case. Now Gamila is receiving this salary. So this salary is an employment income. This salary is an employment income, and for employment income, you need to, as an individual, you need to pay tax. As an individual, you need to pay tax on employment income. You need to pay tax on employment income, right? So 42,500 she is going to pay. 42,500 she is going to pay as an income tax. 42,500 she is going to pay as an income tax, right? Then class 1 employee NIC for the tax year 2020-21. Obviously, when Jamila is the employee, so employee has to pay class 1 employee NIC. So this is the amount. So my dear student, look at this number, 72,300. Please add all these four. Right now the total cost of this whole setup, because this setup is run by Gamila. Gamila, so she all these costs are relevant. All these income taxes, corporation taxes is relevant for you. So in this first case the cost is 72,300 pounds. Okay, now they will give you other options of extraction. Now they will give you other options of extraction. First of all, hold and think over it. Hold and think over it. Now, my dear student, look at the revised basis. Revised basis is this. After meeting with Gamila, a more beneficial approach of withdrawing 125,000. See, total they want to withdraw. Still, she wants to withdraw 125,000. Okay, of profits from the Alimag Limited has been agreed for the tax year 2021. How? See the plan. Gamila will withdraw gross director remuneration of only 25,000. Now she is going to receive only 25,000, not 125,000 salary. Only 25. Only 25. Now Gamila's husband Magnus will become a 25% shareholder in Alimag Limited. Alimag Limited will then pay a dividends of 75,000 to Gamila and 25,000 to Magnus. Okay, so now both husband and wife will receive some amount of dividend income, dividend income. Okay, neither Gamila nor Magnus will have any other income for the tax year 2021. That's it. That's it. Only this is their income. Only this is their income, and we have to work on this plan. And we have to work on this plan. We have to work on this plan. Okay. Now, calculate the overall savings of taxes NICs for the tax year 2021 if the revised basis of profit extraction is used instead of the original basis of profit extraction. Now, you need to check the total net savings. You need to check the no total net saving. If you shift on this, now use your brain, go slow. The existing package was 72,300. Don't forget, the existing package was 72,300. The revised package you need to calculate, and you need to compare. You need to compare it with the existing package so that you can understand. The difference. Okay, right? Students, just give a read and read the notes. Always read the notes. You are expected to calculate the income tax payable by Gamila and Magnus. Okay, we'll do it. The class 1 NIC payable, if any. Yes. Alimark Limited is not entitled to the NIC annual employment allowance. Yes, there is no annual employment allowance available. See, they have clearly written no employment allowance for class 1 employer NIC. For class 1 employer NIC, you guys have studied. You guys have studied an employment allowance, but this is not available in this question. This is not available in this question. Even if you have studied the law, so if you have only one employee, whenever any company has only one employee and that employee is the director, so normally you are not eligible. You are not eligible for that employment allowance, right? Okay, but luckily they have clearly instructed in the requirement. They have clearly instructed in the requirement. You should assume that the rate of corporation tax remains unchanged. Right? Got it? Now, just be active. I'm going to start it. It's not that much heavy. Just one thing you must know: keep the NIC's rate in front of you. If you have exam kit, the NIC's rate on these are on the starting pages of your exam kit. Okay, so if you have the NIC's rate, keep it in front of you so that it goes smoothly. Now start. Listen. First of all, I'm going to start with Gamila. Gamila is now in the new package, is receiving a salary of 25,000. In the new package, open your eyes. Gamila is receiving a salary of 25,000. If I'm not wrong, salary means employment income, and employment income always goes in non-saving column. See, I've made two columns. Also, in the question in the new revised package, you have studied that Gamila is going to receive dividend income of 75,000. So obviously there is a separate column. There should be a separate column of dividend income. Now, non-saving income is 25. See the question, see the screen. Non-saving is 25, dividend income is 75, right? You have your total income of 100,000, and if your total income is 100,000, the net income is also 100,000, because there is no qualifying interest. And if you calculate a and I in this question, that will also be 100,000. There is no gift aid donation or such things like that. So your ANI is also 100,000. So my dear student, if your ANI is exactly 100,000, you will be eligible for personal allowance of 12,500. Okay. So now let's deduct the personal. Now see the screen. Finally, you got the taxable income. These are your taxable income, these are your taxable income. Okay, now let's start the tax computation. When we start the tax computation, always we calculate tax on non-saving income first. So how we are going to do it? Non-saving income is 12,500. This 12,000 will easily come in the first band. This 12,500 will easily come in the first band. So you will have 12,500 times 20%. 12,500 times 20%, right? This is your income tax of 2,500 on non-saving. Okay, now your first, the capacity, the original capacity of your first band is 37,500, and you have now already used 12,500 for non-saving. So this 25,000 is your remaining capacity. This 25,000 is your remaining capacity for dividend income. This 25,000 is your remaining capacity for dividend income. Now, a student, open your eyes. How much is the dividend income? How much is the dividend income? Dividend income is 75,000. Dividend income is 25,000. Okay, 75,000. Sorry. So for dividend income, whenever in your life you want to calculate tax on dividend income, always do first 2,000 times 20%. 2,000 is the NRB. So check it out. Check it out. 2,000 times 0%. Okay. Then you have 25,000 remaining capacity, and 2,000 is used by NRB. So now finally the remaining capacity of basic rate band is 23,000. Finally the remaining capacity of basic rate band is 23,000. So 23,000 times 7.5%. Dividend income basic rate tax rate is 7.5%. Okay. So this is 1725. And now finally, how much is the total dividend income? How much is the total dividend income? 75,000. And you have already calculated tax on 25,000. So 75 minus 25 will give you 50,000. And the higher rate tax for dividend is 32.5%. So this is the amount, and this is your income tax liability. I'm sure you know this. I'm sure you know this because now you are at the end of your course has already been ended. So this is nothing for you now. Okay. Now listen. In this case, Gamila is not only the shareholder but also employee. Gamila is employee. So when employee receives the salary, cash salary, so for cash salary, she needs to pay class 1 employee NIC. For cash salary, she needs to pay class 1 employee NIC, class 1 employee NIC. Okay. So for this 25,000, students see the screen. For this 25,000 cash salary, she needs to pay class 1 employee NIC. Yes. See this. For class 1 employee NIC, if you have the book or if you have the rates, listen, first 9,500, there is 0%, 0 to 9,500, 0%, and then 9,500 to 50,000. 9,500 to 50,000, it's 12%. Okay. So what I'll do, I'll simply subtract 9,500 from this 25,000. First 9,500, there is no NIC. First 9,500, there is no NIC. And the excess amount lies in the second band of NIC. Excess amount lies in the second band of NIC. Students, you must know now, please. So tell me the amount. 25,000 minus 9,500 into 12%. Come on, you help me, guys. 1860 is your class 1 employee NIC. 1860 is your class 1 employee NIC. Okay, we have calculated another thing. We have calculated one more thing, students. Okay, now my dear respected student, in this case, when Gamila is the employee of company, that means company is the employer. When Gamila is the employee, so company is the employer. So each and every employer has to pay, class 1 employer NIC, class 1 employer NIC for your employee. Okay, for each employee. So now let's calculate class 1 employer NIC on same 25,000. On same 25,000. I'm sure you have the rates. On class for 1 employer NIC is 8788. Class 1 employer NIC, the first band is 8788. Okay. And whatever is excess, flat rate of 13.8%. So what I'll do, 25,000 minus 8788 into 13.8%. Tell me, boys, what's the rate? The amount is 2237 as per one of my student. The amount is 2237. Okay. The amount is 2237. Done. Now next. Now next. For company, listen. For company's trading profit was 180,000. And listen, there are two things. One is salary, one is dividend. One is salary, one is dividend. One is salary, one is dividend. Dividend is never, ever an allowed expense for company. It's not an allowed expense, but yes, salary is allowed. Salary is allowed. If you hire employee, the salary is allowed. So the trading profit before everything was 180,000. How much salary? How much salary? Students, check it out. How much salary did the company pay now to Gamila is 25,000. Company paid salary 25,000, so it's an allowed expense. It's an allowed expense. Then how much class 1 employer NIC? How much? 2237. 2237 class 1 employer NIC is 2237. Now can you tell me what is the final profit? Can you tell me, student, what is the final profit? Final profit for company, what is the final profit? Is 152,763. 152,763. Thank you. Okay, this is the final profit for company, 152,763. How much is the tax rate for companies? Flat rate, 19%. Come on, tell me the revised corporation tax liability. Can you tell me the revised corporation tax liability? What is this? 29024. Thank you, 29024. 29024. Okay, so we have calculated corporation tax as well. We have calculated corporation tax as well. Now I have done Gamila's all workings plus corporation tax. One thing is left, Magnus, the husband of Gamila. Okay, so students, now one guy is left, Magnus. You know, Magnus has no other income and he received dividends of 25,000. He received dividends of 25,000. So he's a separate guy. So let's do working. No other income Magnus has. No other income Magnus has, only this dividend income of 25,000. So this 25,000 will be the total income. This will be the net income, and this will be the ANI. ANI. So Magnus ANI is 25,000. So obviously Magnus will be entitled for personal allowance of 12,500. Magnus will be entitled of personal allowance for 12,500. So finally the taxable income. Finally, the taxable income of Magnus is 12,500. Okay. Now let's do NRB. Let's do NRB. NRB. Let's do tax of only this dividend income. So first 2,000, it's 0%. And the remaining 10,500 obviously will lie in the first band. So dividend income first band rate is 7.5%. This is the tax. This is the tax for Magnus. Now the question is, do Magnus, listen, does Magnus has to pay any NICs? No. On dividend income, there is no NIC. On dividend income, there is no NIC. On dividend income, there is no NIC. Right? So now see the big picture. This is all the revised tax workings. These all are the revised tax workings. Please take your time. Please take your time. Have a look. Have a look. Students, did you understand this part? Did you understand these workings? Please hit a message on your chat box. Thank you. Now, my dear respected student, these all are the, still this company is owned by their family. This work, they all are one unit. So all these taxes are relevant. All these taxes are relevant for them. All these taxes are relevant for them. Okay. So now let's compare the old and revised package. Not difficult. The old package, the cost was 72,300. Look at here. In the old package, the cost was 72,300. Okay. Let me write here. Okay. This is the existing package. Now, what's the revised package says? Revised package, revised package. Jamila's income tax, how much? 20475? 20475. Class 1 employee NIC is 1860. Class 1 employer NIC is 2237. Obviously, this is relevant. Magnus income tax is 787.5 and corporation tax was 29024. My respected student, please check. In the revised package, these all are the costs. These all are the Jamila's income tax, class 1 employee NIC, class 1 employer NIC, Magnus income tax and all 54384. The total is 54384. Thank you. Students, please check this. Is there any tax savings? Yes, the existing package was 72,300. 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 How much is 17916? Yes, 17916. 17916 is the tax saving, and that's the end of this question. That's the end of this question. That's the end of this question. Why did we reduce? Wait. Because listen. Because salary and class 1 employer NIC is an allowed expense for employer. Company is the employer. Company is the employer, my dear student. Company is the employer. Okay. And second reason, in the question it was written that from 180,000 is before. See, 180,000 is before taking an accounts of directors remuneration. Okay, so this profit 180,000 was before deducting anything. So now we are doing final working, so obviously we need to deduct allowed expenses. We need to deduct allowed expenses from that. We need to deduct allowed expenses from that. Okay, students, did you get it? Yes, if there was owner of the salary of the company. Listen, owners in the company's case, directors are employees. So directors' salaries are allowed expense. But in individuals, if this was the sole trader question, then individual salary is not allowed. Owner's salary not allowed. We remember we studied this in trading income chapter. Trading income chapter. Now, students, we are moving to the second question. Yes, this question is present in your kit. If you want to open your kit in front of you, you can see this. This question number 109, I think 109, this question is present in your exam kit. So, yes, there is a question. If she transfers more than 25,000, still she can use the basic rate band of the company. But we don't have to do this, because in the question they have already done it, and you were asked to calculate whatever is done. So we are not required to do our own planning. We are not allowed to do our own planning, because the planning is done by the question or the examiner already, right? And you need to work on those numbers which are given. Thank you. Now, Sophia Wong is your next question. Sophia Wong is the next question. And you have this question in your exam kit as well. Let's start. Let's start, please. Sophia Wong has been self-employed as a lawyer. Sophia Wong has been self-employed as a lawyer for many years. For the year ended, for the year ended 5th April 2021, Sophia has forecast that her tax adjusted trading profit will be 80,000. Okay, so this is the tax adjusted trading profit for the business. Now, first of all, right now she is the sole trader. Right now, think over it that she is a sole trader individuals. So if she's a sole trader individual, I taught you she has to pay income tax. She has to pay income tax on non-saving income. And as an individual owner, as an individual owner of the business, she's a sole trader. So on trading income, you need to pay class 2 NIC and class 4 NIC. So this is the existing package. This is the existing package for this lady. This is the existing package for this lady. Okay, now don't sleep. A technical thing is about to come. Technical thing is about to come, please. Sophia understands that she could save tax and NIC if she instead traded as a limited company, and she is therefore considering incorporating her business on 6th April 2020. She's planning to open up a company. Now, the forecast total taxable total profits of the new company for the year ended 5th April 2021 are unchanged to be 80,000. Listen, the profits of the company, the profits for this company is 80,000, is going to be same as 80,000, right? Now, assuming that Sophia Wong, see, this 80,000 is before taking account of any director's remuneration. This 80,000 is before deducting any director remuneration. Don't forget, this is important line. Somebody asked a question in the last question. Please look at this carefully. Assuming that Sophia Wong incorporated her business on 6th April 20, advise her whether or not there will be an overall saving of tax and NICs for the tax year 2021 if she withdraws all of the profits. See, you have two options. See, you have number one, as a director remuneration after allowing for class 1 employer NIC and gross director remuneration will be 71364. Very interesting. Listen. Now, as a student, you may ask, sir, why didn't she withdraw complete 80,000 as a salary? Why didn't she withdraw complete 80,000 as a salary? Why only 71364? Because the reason is, if she withdraws complete 80,000 as a salary, then she has to pay as an employer, company is the employer, company has to pay class 1 employer NIC. So in the corporation tax sheet, there will be a loss. There will be a loss. Wait, listen. And company does not have that much cash as well. Look at here, look at here, look at here. She wants to take out everything from the company. Company has profit of 80,000 as well as cash. Company has profit of 80,000 as well as cash. So what she did, she withdrew salary of 71364. Why? Because company has to pay class 1 employer NIC. Company has to pay class 1 employer NIC as well. Think over it. So this balance is class 1 employer NIC. How much is the balance? Can anybody tell me? How much is the balance? 8636. Yes, 8636 is the balance. So in this way, finally, in the bottom line, you will get zero because you need to extract everything. You need to extract everything. So it's not possible to keep salary 80,000, because if she keeps the salary 80,000, then she has to pay, as a company has to pay class 1 employer NIC. So company does not have that much cash. Company has only 80,000. Company has only 80,000. So this balancing figure is class 1 employer NIC. This balancing figure is class 1 employer NIC. Wait, I'm giving you a super evidence just for you guys, giving you a super evidence. Listen, keep this salary 71634, 71, and calculate class 1 employer NIC. Okay, do it now. Class 1 employer NIC. The salary is 71364, 71364. Okay, can you guys tell me the rates of class 1 employer NIC? Can you guys tell me the rate of class 1 employer NIC? It was 8788. I think first band was 8788, right? You deduct it and multiply it by 13.8%. 13.8%. Check it out. 13.8%. Do it. 8635 or 8636. Almost same answer. Almost same answer. Just for your verification, I have taught you this. This is not needed in the exam. This is not needed in the exam. Okay. So my dear student, in this case, I have just calculated you class 1 employer and IC as a balancing figure. So the first case is she has incorporated the company. She has incorporated the company. And in the first case, she is withdrawing profits in the form of salary. And what is the salary? What is the salary in this question? The salary is 71364. Don't forget, 71364 is the salary. Okay. Take your time and read it. Take your time and read it. Don't rush. Don't rush. Go slow, 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 slow. Easily read it. I'll solve it. Don't worry. Now listen. I'm just doing the option one right now. Leave it. Option two, I'll do it afterwards. Listen. In the option one, she is taking out as a salary of 71364. She is withdrawing salary as she's taking out salary of 71364. Look at here. Obviously this 71364 is the employment income. Salary is the employment income, and on employment income you need to pay income tax. Okay. And employment income is a non-saving income. Employment income is a non-saving income. So 71364 is your employment income, non-saving income. Now you don't have any other income, so this will be your total income. This will be your net income. This will be your ANI. And if your ANI is less than 100,000, if your ANI is less than 100,000, so definitely your personal allowance will be 12,500. Your personal allowance will be 12,500, right? Okay. So now see this. 71364 less 12,500. How much is this? 71364 less 12,500. How much is this? Please tell me. 58864. Thank you. 58864. Okay. 58864. Now you need to calculate income tax on it. 58864. You need to calculate income tax. Simply it's non-saving income. 58864 and the first band is 37,500. So obviously this 58864 is greater than 37,500. So you have consumed the whole first band. 37,500 times 20%. 37,500 times 20%. Now how much is left now? 58864 less 37,500 is 21364, is 21364 times 40%. 21364 times 40%. How much? 8546. Okay. Now can you tell me the total income tax? Total income tax is how much? 7,500 plus 8546. His how much is the total income tax? 16046. 16046 is your total income tax. 16046 is your total income tax, right? Now hold. As she is the employee, so definitely all employees in UK has to pay class 1 employee NIC. All employees in UK has to bear class 1 employee NIC. Okay, so let's calculate class 1 employer NIC. I'm sure you know this. Class 1 employer NIC 0 to 9500, 9500 to 50,000, you remember, and then 50,000 and above. 0 to 9500. So the first band 9500 is 0%. Okay, so it will be 0. For the second band 9500 to 50,000, 95,000, 9500 to 50,000, it's 40,500 times 12%. Okay, and then 71364 less 50,000 is how much? 21364. Thank you. 21364, it's 2%. It's 2%. Can anybody tell me how much is 40,500 times 12%? I need breakup. How much is 20,000 40,500 times 4860? Then 21364 times 2% is 427. Can you tell me total class 1 employee NIC? Total class 1 employee NIC. Can anybody tell me? Can anybody tell me is 5287? 5287, right? Okay. Right. Now, for class 1 employer NIC, no need to calculate. Already we have calculated. See, let me show you. This is class 1 employer NIC is 8636. We have already calculated through balancing figure. 8636. 8636. Already a balancing figure is done. And my dear student, in this case there is no corporation tax because everything you have withdrawn as an allowed expense. Everything you have withdrawn as an allowed expense. So the bottom line of the TTP is 0. There is no, so there should be no corporation tax. So let's calculate the total cost. Total cost in the case 1. How much is the income tax? Income tax is 58864. Income tax is 58864. Class 1 employee NIC is 5287. Class 1 employer NIC is 8636. And there is no corporation tax. Please, students, can you add all these three numbers? Can you add all these three numbers? Oh, sorry. My bad. Income tax is 16046. I'm sorry. 16046. 29969. 29969 is the total cost. Total cost in this package. 29969 is the total cost, and this package is not good. This package is not beneficial. Wait, let me compare it with the original sole trader. So original sole trader amount was 23982. Look at here. Existing cost was 23982. Her existing tax cost as a sole trader was 23982, but now it is 29969. So it's not good. Option number 1 is not beneficial at all. Option number 1 is not beneficial at all. There is a question, sir, why we are calculating class 1 employer NIC? Why? Because when she is the employee, company is the employer. When she is the employee, company is the employer, and company has to pay class 1 employer NIC for all employees. Have you checked the first package? The first package is not good at all. The first package is not good at all. The first package is not good at all. Now let's move to the second package. Listen, in the second package, see the requirement. The profits of the company was 80,000. The profit of the company was 80,000. Don't forget, you must know a little 1% accounting. Now dividends, or after allowing for corporation tax, dividend will be 64,800. 64,800. Now she will receive a 64,800 dividend income. Now as a student you may ask, listen, you will say, sir, the profits were 80,000, why is she withdrawing only 64,800? The profit was 80,000. The company's profit was 80,000. Why is she withdrawing only 64,800? So my innocent students, innocent guys, listen. That 80,000 is before tax. So company has to pay corporation tax as well. Company has to pay corporation tax as well. And you know, dividend is not an allowed expense. Dividend is not an allowed expense, right? So you have to pay. First of all, company has to pay corporation tax as well. Okay, I'll show you the working. But the second case is, now she's withdrawing funds in the form of dividends. Okay, now let me show you. Listen. The trading profit for the company was 80,000. Okay, so first of all, in this case, now when she's planning to take out in the form of dividends, now nothing is allowed expense. Nothing is allowed expense for company. Okay, dividends are not at all allowed expense. So this is, she has to pay 19% tax on this. She has to pay 19% corporation tax. So this will be 80,000 times 19%, 15,200. 15,200. Right now, just use your brain. Out of this 80,000, 15,200 cash, you know, you need to pay tax in the form of cash. Out of this 80,000, 15,200 is given to government, 15,200 is given to tax department. So how much is left? So balance is left is 64,800. Balance left is 64,800. Balance left is 64,800. So definitely she can only take out 64,800 as a dividend. Sophia can only take out 64,800 as a dividend. Now, okay, let's do it again. 64,800 will be dividend income for Sophia. No other income. So definitely this will be your total income. This will be your net income. This will be your ANI. And when your ANI is less than 100,000, so you will have 12,500. You will have personal allowance of 12,500. So 64,800 minus 12,500, 52,300. Now on this dividend income, you can see this. See this. I have done the working. First 2,000, it's 0%. Then 35,500 is 7.5%, and then 32.5%. So this is your total income tax in this case. I'm sure, listen, you know this tax computation, otherwise you should resign. You should immediately resign. Immediate resign. If you don't know income tax working till now, just few days left in the examination, then you should give a big resignation on Facebook, on LinkedIn, that you can't do. At least you must know this tax computation, please. Or tell me your name, I'll make a video for you. Do you know this income tax computation? 2662.5 plus 4810. 2662.5 plus 4810 is 7472.5. Okay. Now the income tax is correct. Now let's calculate the total cost. Let's, in this case, there is no class 1 employee NIC. There is no class 1, no NICs, because there is no employment income. In this case, there is no employment income. So don't think about NICs and all. Don't think about NICs and all. Okay. So you will have, the cost is, corporation tax is how much? Corporation tax is 15,200. Okay. Income tax is 7,472. That's it. Leave it. 0.5. No NICs. What is the total cost? What is the 22672? 22672. Yes, this package is beneficial. This package is beneficial because the existing cost was, or existing was 23982 when she was the sole trader, when she was working as a sole trader. So the cost was 23982 and now the cost is 22672. My dear student, can you take the difference? Can you take the difference, please? 1310 she can save. 1310 she can save. That's the end of this question. That's the end of this question. Did you understand? Tell me, did you understand this question? Please be assertive. We did through two packages. We did this question through two packages. Yes, my dear student, is listen. For this topic, you must know, you must have good grip on NICs, or you should watch the NICs class again. NICs, you must have good grip on all NICs. Class 1 employee, class 1 employer, class 1A NIC, class 2 and class 4, right? One student is asking why we are not calculating class 2 and class 4. Class 2 and class 4 is only calculated on trading income of individuals trading income. This is dividend income. On dividend income there is no class 2 and class 4. There is no NIC at all. On dividend income there is no NIC at all. Okay, now the last question of today's class. Last question of today's class. This question is also present in your kit, and this is not a planning question. 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 Right? Kaya, you should assume that today's date is 25th March 2021. Today's date is 25th March 2021. 25th March 2021. Kaya is managing director and 100% shareholder of Hoppy Limited. Hoppy Limited has no other employees. Okay, she's the only employee. For the year ended 30, for the year ended 5th April, for the year ended 5th April 2021, Hoppy Limited tax adjusted traded profit after taking, after this time it is written after taking account of directors remuneration and employees class 1 and class 1 employers NIC is 80,000. Okay, so already they have done something. Already they have done something. Already they have deducted these things. Listen, Hoppy Limited, Hoppy Limited has already paid. Hoppy Limited has already paid gross director remuneration of 30,000 and dividends of 45,000 for the tax year 2021. See, this is these things are already done. These things are already done, and obviously we know this. We know this thing that dividends are not allowed expense, but yes, this salary is allowed expense. This 30,000 salary is already been deducted. This 30,000 salary has already been deducted, plus class 1 employer and IC on this salary has already been deducted. Sir, how do you know? See this, what is written after. They have used the word after taking account. So existing salaries, don't sleep, this is a technical thing, please don't sleep. Existing salaries and existing class 1 employer and IC has already been deducted in this 80,000. Existing salary and existing class 1 employer and IC has already been deducted. Already been deducted from this 80,000. Don't forget. So now we have to do additional planning. Kaya does not have any other income. Based on these figures, Kaya, the figures, the tax and the NICs of Kaya and Hoppy Limited. C, for the existing, existing income for this existing upper plan, whatever the plan is written here, they have already given you tax computation. Kaya's income tax is this. Kaya's class 1 employee NIC, obviously she is getting salary. Obviously Kaya is getting salary of 30,000, so she has to pay class 1 employee NIC. So yes, this is the NIC, existing NIC. Hoppy Limited, Hoppy Limited has to pay corporation tax. Yes, yes, yes. And see, 80,000 times 19%. I can give you evidence. Already the profit is 80,000. Already the Hoppy Limited profit is 80,000 times 19% is 15,200. And for existing salary, of 30,000, there is a class 1 employer NIC. So students, these are the existing numbers. These are the existing numbers. These are the existing numbers. Okay. So now they are going to tell you something new. Now in the last paragraph, they are going to tell you something new. Let's see. However, on 31st March 2021, Kaya is planning to pay herself a bonus. Bonus is also salary. Bonus is also part of employment income. We all know this fact that bonus is also the part of employment income. Bonus is also part of employment income. But is unsure whether to take this as additional director's remuneration. The gross director remuneration will be as or as an additional dividend. Wow, wow. You have two options. You take out this 25,000 as a bonus, take out this 25,000 as a bonus, or take out this 25,000 as a dividend. Take out this 25,000 as a bonus, or take out this 25,000 as a dividend. Wait, if you take out this additional, this is additional to salary. Salary has already been given. Salary has already been given. This is an additional thing. If you take out this additional 25,000 as a salary, so this 25,000 bonus or salary, whatever you want to say, this 25,000 bonus or salary will be an allowed expense for company. We'll deduct it. Plus, you need to calculate some additional. You need to calculate some additional class 1 employer NIC on it, and that additional class 1 employer NIC will also be allowed expense, because they have already deducted existing NIC. They have already deducted existing NIC. Okay. Now, come to Kaya. As Kaya is receiving additional salary, obviously she has to pay income tax on that, and obviously she has to pay class 1 employee NIC on that. Okay. So this is the consequences of bonus, taking out additional bonus. But if she takes out dividends, if she takes out this 25,000 as a dividend, then no change for company side. Then company does not have to pay any class 1 employer NIC, and no additional allowed expenses for company. Use your brain, please. Strictly use your brain. If she withdraws this additional 25,000 as a dividend, then my dear student, this 25,000, no consequences on company's side, no extra consequences, no more allowed expense for company, and no more changes in corporation tax. But yes, as an individual, she has to pay income tax on that dividend. As an individual, she has to pay income tax on that dividend. Okay. I'll show you how we'll approach. This is a very good question. If you want to take the pick of the question, you may, or if you have your exam kit, take it out. If you have your Kaplan exam kit, you may take out. If you have your Kaplan exam kit, you may take out. This is the question. Read the notes. You are expected to calculate revised income tax liability NICs of Kaya and revise. You should assume that the rate of corporation tax, that's same. It's same. We know this. It's 19%. We know this. Okay. Now listen. Listen. Look at here. Look at here. What she asked, you are expected to revise income tax liability. We need to calculate income tax again, right from the zero. So listen, what was the, I'm doing option number one. I'm doing option number one, please. This is the last question, so please concentrate. In the option number one, what was the existing salary? What was the existing salary of this girl is 30,000 and existing dividends were 45. Existing salary 30, existing dividend 45. Okay, slow. Now she's getting one more additional bonus of 25,000. One more additional bonus, and yes, bonus is the employment income. Bonus is the employment income. So 30 plus 25, 30 plus 25 is how much? 55,000. So now her employment income is 55, but the dividend income remains unchanged. I am doing option number one, not option two. Option number one, only employment income will change. Okay. Now 55 is the total. 55 plus 45. 55 plus 45 is 100,000. So your ANI will also be 100,000. And when your ANI is 100,000, you will have a fixed personal allowance of 12,500. So let's deduct personal allowance 12,500. You will have taxable income of 42,500. Now, respected students, it's once again basic income tax calculation, and you all are masters. You all are masters. You all are masters of it. You all are masters of it. Listen. You will have 30, listen, 42,500. 42,500 is your taxable income. 42,500 is your taxable income. 42,500 is your taxable income of non-saving. In non-saving, what's the first band? In non-saving, what's the first band? The first band is 37,500. So as your non-saving taxable income is greater than 37,500, your first band will be consumed totally. Your first band will be consumed totally. So 37,500 times 20%. 37,500 times 20% is 7,500. 37,500 times 20% is 7,500, right? Now, how much excess is left? 42,500 minus 36 is 5,000. And the second rate band for non-saving income is 40%, so it's 2,000. Now come to the dividend. Dividend income is 45,000. Dividend income is 45,000. And whenever in your life you want to calculate tax on dividend income, always there is a simple rule. First 2,000 is 0%. First 2,000 NRB is 0%. And in the excess 43,000, the excess 43,000 as the first band has already consumed. So dividend second rate, higher rate band is 32.5%. So this is your ITL. Students, look at it. This is your ITL. I'm sure you can understand it. This is your ITL. Please check it out. This is your ITL. Take your time. Take your time. Take your time. ITL is not difficult. Now hold. You know, class one employee NIC, when you were kids, class one employee NIC is calculated on cash, on all cash received, bonus and salaries. Remember, for bonus and salaries, yes, you have to calculate class one employee NIC. So in option number one, the bonus is 25,000 and the cash salary is 30,000. The bonus is 25,000 and the cash salary is 30,000. So 25 plus 30, 25,000 plus 30,000 makes how much? 25,000 plus 30,000 makes 55. Okay, so let's calculate class 1 employee NIC on 55,000. Class 1 employee NIC on 55,000, right? So do you remember the rates of class 1 employee NIC? I just told you, or you can open your kit. In the examination, you will be given the rates. For class 1 employee NIC, listen. For first 9,500, it's 0%. For additional 40,500. Why? From 9,500 to 50,000. 9,500 to 50,000, it's 40,500, it's 12%. And then you have 5,000 extra. 5,000, it's 100. Can you tell me 40,500 times 12% is how much? 4860. Thanks. This is, I think, 4,960. Okay, so your revised class 1 employee NIC, your revised class 1 employee NIC is 4,960. Your revised class 1 employee NIC is 4,960. Okay, students. Now wait. I'm going to calculate class 1 employer NIC right from the scratch again. I'm going to calculate class 1 employer NIC right from the, because employer, company is the employer. Your bonus plus salary is 55,000, and the bands of his, the class 1 employer NIC band is 8788. I'm sure you know this. 8788. How much is this? 6377. It's 6377. Okay, now this is your total class 1 employer NIC. Wait, this is your total class 1 employer NIC, but already some class 1 employer NIC is given in the question. Read, take it. This is the already 256. Sorry. Already some class 1 employer NIC is 2927. Already some class 1 employer NIC is given in the question 2927. So can anybody tell me what is the additional class 1 employer NIC? The additional class 1 employer NIC is 3450. The additional class 1 employer NIC is 3450. Sir, why did you calculate? Additional class 1 employer NIC? Logic. Because the existing class 1 employer NIC has already been deducted from 80,000 profit. The existing class 1 employer NIC has already been deducted from 80,000 profit. So we need to calculate revised corporation tax. We need to calculate a revised new corporation tax as per your requirement. That's why I have calculated additional class 1 employer NIC. Now take 1 minute, just 1 minute silence and read it. Just check it. I'll do the corporation tax, don't worry. Just take 1 minute silence and just see this and think over it. Yes, it's a technical question, I accept. Now listen. Now we are going to calculate. Yes, we can also calculate it direct. Yes, one student told me that for this 25,000 directly apply directly 13.8%. You can apply directly 13.8% on. You can apply directly 13.8%. 13.8% on. You can apply 13.8%. 13. You can apply 13.8% directly on this 25,000 to get 3450. Okay, now let's calculate revised corporation tax liability. Think over it. It is written in the question that 80,000 profit is before taking account. 80,000 profit is before taking account, before taking account, sorry, 80,000 profit is after taking account of the existing salary and existing class 1 employer and IC. So now we need to deduct the additional bonus. Now we need to deduct the additional bonus and additional class 1 employer and IC. Now we need to deduct the additional bonus and additional class 1 employer and IC from this 80,000. Can you tell me what is the additional bonus? Additional bonus is 25,000. Additional bonus is 25,000, right? And additional class 1 employer and IC is 3450. These two are allowed expenses. Additional class 1 employer and IC is 3450. So these two are allowed. So final answer is 51550. 51550. The final answer, students, are 51550. 51550. And what is the corporation tax rate? It's 19%. So you will have 9795. 9795 is your revised corporation tax. Okay. So option number one is done. Option number one is done. In option number one, we have calculated revised income tax liability for Kaya and revised class 1 employee NIC, revised class 1 employer NIC, and as well as corporation tax revised. For option number one, everything is done. Option number one, everything is done. Please check. Option number one, each and everything is done. Now we'll be moving towards option number two. Option number two. Listen, read the question. For option number two, this is additional dividend. See, this 25,000, she can withdraw this additional 25,000 as a dividend, additional 25,000 as a dividend. Now just think over the consequences. For company's point of view, if company is paying this additional 25,000 as a dividend, so dividend is not an allowed expense at all. Dividend is not an allowed expense at all. Dividend is not an allowed expense at all. So no more changes from company's side. So no more changes from company's side. Company's corporation tax will remain same. Company's corporation tax will remain same. Okay, right? And then no more changes in class 1 employer NIC, because for this dividend there is no NIC. For this dividend there is no class 1 employer or class 1 employer NIC. So no more changes in NICs. No more changes in NICs. I repeat, if, listen, this is the limited company, and if Kaya receives 25,000 as a dividend, if Kaya receives additional 25,000 as a dividend, so this dividend is not at all an allowed expense for company. So no more allowed expenses for the company. So company's profit will remain same. Company's profit will remain same as at 80,000. Company's profit will remain same as 80,000, right? Okay. Now listen. See this. Option number two, no change in class 1 employee. See this, read it. No change in class 1 employer and IC. In option number two, there will be no change in company's trading profit. So there will be no change in corporation tax liability. So corporation tax liability will be same as 15,200. First read the theory. First read the right hand side. See, now this lady is extracting more dividends. This lady is extracting more dividends. So from company's point of view, ordinary dividend is not allowed expense. And when ordinary dividend is not an allowed expense, so company's profit will remain 80,000. So you can apply 80,000 times 19%. Do it. 80,000 times 19%. The profit is 15,200. The profit is 15,200. Right? Then finally, then see this. No change in class 1 employer NIC, nothing, because on dividend there is no class 1 employer or class 1 employee NIC. Now look at from Kaya's point of view. I'm doing something with shortcut. I'm doing something with shortcut, and even the examiner requests you to do it like that. Even the examiner tells you, listen, now she will receive, that lady will receive 25,000 extra dividend. Existing package of this lady, existing package of Kaya was 30,000 employment income and 45,000 dividend income. 30,000 employment income and 45,000 dividend income. Just use your brain. This 30 plus 45, this 30 plus 45, 30 plus 45 is almost 75. This 30 plus 45 is almost 75. That means by, if you consider these two existing income, if you consider these two existing income, she has already used the basic rate band. She has already used the basic rate band as well as personal loans. She has already used the basic rate band as well as personal loans. So now more additional dividend income, now more additional dividend income will come in his account. If more dividend income will come in her account, so she has to pay tax on that dividend income on higher rate. She has to pay tax on dividend income on higher rate. So the additional 25,000 she has to pay 32.5%, 32.5%. This will be 8125 additional tax. This will be 8125 additional tax. This will be 8125 additional tax. Now, can anybody tell me what's her existing income tax? Wait, existing income tax was, wait, we'll go to the question. Exit 12975. Yes, additional income tax for Kaya. Additional income tax for Kaya is 12975. So if you add these two, how much is this? How much is this? Now I want to advise something. Listen, there are some students who don't feel comfortable with this method. There are some students who don't feel comfortable with this. So for those students, I request you can do it once again. How? 30,000 is the employment income. Make dividend 70. 45 plus 25 is 45 is 70. Yes, make dividend 70 and start computing tax from zero. You can do tax computation from zero, deducting personal allowance and everything. You will end up with this 21,100. You will come to this number as well. Those students who are not satisfied, those who are not comfortable with this additional tax, additional extra tax computation, they can do like this: 30,000 employment income and 70,000 dividend income, and now compute tax from zero. Now subtract personal allowance and everything. You can do it like this. Okay. In option number 2, no change in class 1 employee NIC. No change in class. Obviously, when you have extracted as a dividend income, 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 you will have no change, no more implications as class 1 employee NIC. Did you understand it? Did you understand it, students? My dear students, did you understand it? In this question, you don't need to do any planning. Just you have to solve it. Just you have to solve it. No need to give any advice, any planning, nothing. That's the end of the question. But yes, all these three questions are technical. This is the technical area of your course. Technical area. Normal feedback. Listen, normal normal feedback of this area. Normally students, they get confused in this area in the examination. This is the normal feedback, I'm telling you honestly. So yes, I would recommend you to do these questions again yourself. Even though you have studied from me, you have already taken the class. Do these questions again. And there are some similar questions as well. I have taught you three, maybe two, three questions you may find more. Two or three questions you may find more in the exam kit or past paper. So do all those six questions again. This is must. And this is the technical area. Make notes of this technical area. And one more thing, for this area, examiner has written an excellent article, excellent outclass article. I've forgotten the name of that article. I'll send you guys that article. It's on accglobal.com. Higher skills. Yes, the name of this article is higher skills. Listen, this topic comes in P6 as well, ACCA P6 advanced ATX course as well. So this topic is slightly linked to ATX course, right? So that's why your examiner has written an outclass article. Your examiner has written an outclass article for this topic with the name of higher skills. Remind me, I'll send you that article, or if you can directly take it from the accglobal.com. Now, student, I would like to advise you, as you have now ending days, you should work hard. You should for the last 3-4 days, I would recommend you to solve kit orally. I'm telling you this technique, oral kit. How? In the last 3-4 days, you won't have that much time. Last 3 days, I'm telling you. First of all, you need to see the question, then think about the answer, check the answer. Then question number two, question, think about the answer in your mind, then check the answer. Solve complete kit in this way, so you will be recalled with all problems. You will be recalled with all technical issues. Okay, because in the last 3-4 days, you don't have time to write. First advice. The second advice, must solve mock exam. Must do mock exam. Do complete question as a mock exam, right? Do mock exam. This is the very good advice. And one more thing I would like to tell you, that there are some students, they study for the whole 6 months and they don't clear. They study for the 6 months and they don't clear. And there are students, they study for 15 days and they clear. Believe me, in past, maybe it's 2015 or 16, I don't remember the year exactly. At that time, I used not to teach online. So we had physical classes, and we used to give physical crash courses, physical class crash course. Now we don't offer physical crash course. So I still remember one guy joined me in back in 2015 or 2016. That was the December attempt, I remember. And he joined the crash course on 20th November or 18th November. 18th November, he joined the crash course. He took the first class of crash course, and he was from master's MBA, because he got some exemptions. He got some exemptions in MBA, and then he joined ACCA. And he was doing the taxation first time in life. So he attended my first class of 8 hours from morning 9 to 5, constant class. And after the class, he came to me, sir, I have only 15 to 20 days, because that date was 18th November and the examination was on 5th December. Just think, like 20 days, right? So he told me, I haven't done tax yet, and this was my first crash class. Should I give taxation paper? What would you advise? You know what I asked? I asked, did you understand today's class? I just asked one question from that guy. Did you understand today's class? He said, yes, I have understood everything in your today's class. I said, okay, buy your exam kit and give your paper. Buy your exam kit and give your paper. He bought exam kit. Literally, he bought exam kit on 20th November, and he cleared his paper on 5th December. I'm telling you. I'm telling you. And I remember this guy is working in Pakistan, Daraz company, Daraz. He's working in Daraz since long. At that time, he was also working in Daraz. And when he cleared the paper, because results come after 1.5 months, he posted this on Facebook. That I cleared paper in 15 days, and he thanked me. Listen. So I shared his status. I shared his post, and then he reshared my post. And he wrote it. He wrote this quotation: happiness is when your teacher share your status. And he was very happy. So this is an ideal example that if you really want to study, if you have pure intentions, if you are really committed to work hard, you can clear your paper in 15 days. And if you don't want to clear, you can't clear in 1 year. There are examples of students, those who can't clear in complete 1 year. Okay, so it's up to you now. Still you have good time. Just utilize your time, make a schedule, use your resources. You have good resources, everything is on one click now. At that time there was no online teaching. Now you have everything. You have teacher in your bedroom, in your laptop. You just on a click away, and everything, whatever you want, you can do rewind, you can do forward, you can skip unnecessary things. Everything is on your hand, in your hand. Just think. So now there is a big time difference. Technologically we are very advanced now. So students, best of luck for your exams. Okay, don't waste your time. And remember, remind me, I'll send you something on WhatsApp group, the difference between individual tax and companies tax to you guys. Okay, right? So take care and best of luck. I'll be sending you these slides soon. Thank you, take care.